Good afternoon, everyone. Welcome to this session on the launch of our new fund offer, HDFC BSE Sector Leaders Index Fund. So, as you all know, it's an index fund, and we have the NFO running from 7th of this month to the 21st of November. So with me is Shikhar Sethi, who is our investment specialist, who will take you through the presentation in detail. But before I hand it over to Shikhar, just wanted to set brief background in terms of what the overall concept behind Sector Leaders Index Fund is. So traditionally, we have heard from investors in the Indian context, when it comes to equity investing, we want to invest in large companies, typically what we call as blue chips. While there is no official definition of blue chips, people typically refer to companies that are having stronger backing, good set of numbers in the balance sheet, typically are leaders. So most likely what we hear from people is that they are referring to industry leaders or sector leaders. We all are aware of the growth potential that India offers. The last 10, 20, 30 years, India has been a growth economy. Next 10, 20, probably 30 years, we believe India will be a growth economy. We even have a belief that most sectors in India will do well. So the price is not for choosing the sector like this sector. Time tactically, sometimes we do take sectoral calls or thematic calls and investing in those type of funds. But most likely, most of the sectors in India are likely to do well because we are in a kind of structural growth story for the next 10, 20 years. Having said that, within each sector or each industry, we have seen that typically two or three businesses that do continuously well. Sometimes that name changes from time to time, but typically the sector leaders can be defined as two or three businesses in each sector. So, what do what what do they have in common? How do they stand out? More often than not, the sector leaders, be it say IT sector or a banking sector or the auto sector or the FMCG. So whatever is a sector, typically these are the businesses that stand out in terms of three or four characteristics. For instance, the industry growth is there. Bulk of the industry growth is captured by these three or four businesses. As we look for the next 10 years, the growth is visible, but it is typically these three or four names that are able to. I'm not saying at all points in time in all sectors that's true, but this is typically the nature of these sector leaders. They strive for constant innovation to bring out newer products, newer services, newer ways to approach customers. So they are always on the forefront of innovation kind of leadership. They typically have strong brands that is common across industry leaders and loyal customer. There is always this loyalty towards strong brands that we have seen. They are also resilient when it comes to going through market cycles. India in the last 20, 30 years have seen ups and downs in terms of economy as well as markets. It is the industry leaders more often than not have demonstrated leadership in terms of going through cycles in a resilient manner. They are also are kind of financially strong. If you look at their balance sheet, P&L, typically industry leaders kind of have very strong balance sheet and numbers and the P&L and the profit growth, etc. So is there a way to invest systematically in those businesses? They have also been strong wealth creators. Let's not forget, industry leaders have been strong wealth creators in the last many years. That's what we will see in this presentation also. They have outperformed the broader market indices also. So why not have a product tailor made for the need to invest in sector leaders? That's where this thought process of launching this index fund comes up. So as you all know, as I've told you, this is an index fund. It has its defined way of investing. It's a methodology. That's what I will request Shikhar to cover when he goes through in detail. But net, I just want to leave behind one main point is that over a period of time, this kind of investing into sector leaders not only has generated stronger returns, but has also, in a way, kind of controlled the risk in terms of the drawdowns or the when the market falls. More often than not, the sector leaders have kind of fallen less. That also we will see in terms of the volatility and other metrics that we have put up on this presentation. So, with that, I request to Shikhar to take us through this presentation in a detailed manner.
Yes, thank you, Ram. So while Ram has set the context, for the overall session today, I'll also set a brief context for what the presentation is looking to cover. So it's broadly divided into three parts. The first part, we will be talking about what makes leaders special. Where do they get that unique USP that makes them so special and different from the rest of their peers. Second part, we will discuss why does investing in leaders make sense. So what is it? What are the long-term benefits of investing in the leaders within any particular industry? And we'll see some practical examples of leaders in the industry and how they've been able to maintain their leadership position through long periods of time. And finally, we'll explore how the HDFC BSE India Sector Leaders Index Fund gives you, allows you to create long-term wealth by focusing on the sector leaders, but also by diversifying across the entire economy through a single product. So with that, I'd like to begin with the specific slides. So first point actually Ram has touched on, I'll just expand on it a bit, is what are the benefits or what sets leaders apart from the rest of the peers in the industry. So the first thing is that these companies are generally well positioned to capture a larger share of the sectoral growth. So because they are more often than not the dominant businesses in their industry, they tend to be massive beneficiaries of network effects. So since they have the largest networks, it's much easier that any incremental growth that comes into the industry is captured by the existing leaders. We see this across a number of industries, right? Second point, and this is actually a key point, is that these companies tend to be more innovative than their peers. So innovation not only in terms of what products they make, but also how they make them, how they sell them, how they market them, how it's distributed. There are a whole plethora of ways to innovate, and these companies excel at that. They're in fact there it's in many cases it's inbuilt into their DNA to always look for a better way to do things and stay ahead of the competition. Third one is that these companies are very well known for their brands. In fact, as we'll see later when we talk about specific companies in the index, many times the companies themselves are synonymous with the industry. So when I talk about an industry, the names that you'll see are the first kind of names which will pop into most people's heads. So this brand that they have cultivated over a long period of time, it's a extremely important asset for the company, and it encourages customer loyalty, which is especially important during difficult market conditions. And the other two points are linked to each other. The leaders, right, they are often resilient during difficult periods for the industry. And the reason this they can do so, one of the key reasons is that they often have stronger financials. So this means that if there is a downturn in the economy where another company may be struggling with how it could repay its debt or manage relations with its creditors, the companies which are leaders, they often have very conservatively financed balance sheets. That means very little debt, lot of equity, and this leads them to be resilient to the tough times. So they can maintain their pricing power. They can often make acquisitions sometimes during these difficult periods of time. So having this kind of balance sheet strength is something which is very predominant among leaders, and is another reason which makes the leaders shine. So what if we take these five factors and combine them? What is the end result? Why does any of this matter for investors? The answer is that when you combine these five factors and you sort of invest in the leaders, the result is long-term wealth creation. And the reasons are sort of self-explanatory. These kind of companies, they consistently innovate, expand, they reinvest, they're not afraid to try new things, create new markets, do things differently. And that is exactly why they are able to remain relevant and continue to grow over the long term. So there are several benefits of investing in the leaders, and the end result of all the things which set them apart from their peers is long-term wealth creation, which one hopes that investors can also participate in through the sector leaders index fund. So very quickly, I'll just go through some of the key sectors. Of course, there are 21 sectors in the index, but here are some of the key sectors and names in these sectors. These are chosen by the ones which have the largest weight. And if you look at the names, on this slide and on the next, they are all household names. Every person has heard of them. Look at financials. You have leaders across retail lending, industrial lending. SBI, of course, has a massive network of branches across urban and rural India. Within IT, the names on this list, they are literally, the names which put India on the IT global map. They are responsible for the bulk of India's services exports, and they have been a massive pillar of growth for the economy. If you look at oil and gas, one name stands out, which is Reliance. Reliance, of course, has started off in this oil gas business, and it still tends to be the largest part. While of course it's now extremely diversified into telecom, retail, so on and so forth. But just because of its legacy business, it has been grouped into this segment. And apart from that, you have IOC, ONGC as well. Speaking about brands, as I did in the previous slide, just look at the names like Surf, Quality Walls, Lifebuoy, Maggie, KitKat. All these, or Ashirwad, in the case of ITC, all these very famous brand names are coming from the three companies that represent the FMCG sector and account for 7% of the index weight. So you can see, the brand, the customer loyalty very much in action in this index. Next sector, very interesting, is telecom. So this is a sector which had gone through a period of consolidation. Now, Bharti, for example, has quite a bit of pricing power along with Jio. And apart from that, you also have Industars, which is an infrastructure provider for this segment. Last one, of course, there are 21 sectors, as I said, but this is the sixth largest one that we'll just talk about on this slide, is the auto sector. Again, very topical because of the excitement around the GST cuts. Definitely that has translated into a bump up in sales as well for these companies. And here you can see, for example, Mahindra, Tata Motors, names which are really at the forefront of the EV revolution in India. So again, ties back to our initial slide where we talked about innovation. These companies have seen, what the potential, the scale of EVs can be globally, and they are rushing to make this a large part of their product portfolio back home in India as well. So overall, the main message from these slides is that, and we'll see some practical examples as well, but through all these companies, whether it's their innovation abilities, whether it's their brand, whether it's how long they've just been in the market, they all have some deep moats which have allowed them to cement their leadership position, and this will also help them to springboard to the next level. So here we'll just look at a few practical examples of what it means to be a leader and therefore be part of this index. First company is an absolute standout name in the construction sector, which is L&T, right? So this is a absolute behemoth in terms of its order book. It has a 5.8 lakh crore order book. It is India's largest EPC, so that stands for Engineering, Procurement and Construction Company. And two things are worth noting, about this massive order book that it has. One is that it's quite diversified across verticals, and the verticals are distinct from each other. So, for example, some are infrastructure, some are in energy, some are in high tech manufacturing. So this gives a lot of diversification and scale to the business. And the second very interesting thing about L&T is how it has managed to expand its global footprint. So some of the older listeners on the call will remember how the 2018 to 19 period was a difficult period for any sort of infrastructure or cyclical company in India, because there was a quite pronounced slowdown during that period. So while many companies were struggling, L&T, because of its leadership DNA, instead of seeing it as a problem, it looked at that slowdown as an opportunity. And in fact, since then, it has significantly diversified its order book internationally as well. So starting in FY18, just 26% of the order book was from the international market. Now it's almost a 50-50 split, right? So this is showing you how these companies are able to adapt, modify, improve their business models even in the face of difficulties. And this is an extremely useful trait, for investors to capitalize on. Second thing, just to give you a flavor of what all this company has achieved. So because of their massive scale, big balance sheet, global expertise, they have been able to do things that no other construction company in India has even come close to, right? So for example, they have built the Statue of Unity, which is the world's tallest statue. It's around 182 meters high, and just for context, that means it is twice as high as the Statue of Liberty, right? So it's to have something which is world leading in India is definitely something worth recognizing and commending. Second one, of course, there are many more, but for lack of space, we've had to cut it down. Second one is the Atal Setu. So maybe people who stay in Bombay may not be as familiar with it, but for so just a brief introduction, it's about a 22-kilometer long bridge spanning across the open sea and connecting two parts of Mumbai. So it has in fact cut down the commute time from over 2 hours to just 20 minutes. It is India's longest sea bridge, and it is the 12th largest sea bridge in the world. So, and also, it is now connecting, let's say, central Mumbai to the new airport which has opened up in Navi Mumbai. So these are, projects which are extremely difficult to plan and execute and complete. But L&T, with its, because of its leadership qualities, has been able to do these and add all these feathers to its cap. Next one quickly, another leader in the auto sector. So we've chosen Mahindra and Mahindra because it again is able to straddle both the urban and rural market segments extremely well. So one stat that really stood out for us was how in the tractor segment, which is obviously more rural linked, it had this last financial year, it recorded this highest ever market share. And not only that, it has remained the leader in that segment for the 42nd consecutive year. So that's really stands testament to how good their entire, it's not just about the product, it's also about how you market it, how you sell it, how you do after sale service, so on and so forth. And clearly Mahindra have displayed, M&M have displayed their leadership in that category. And it's not that they're just a tractor company or they've not been able to diversify. They are actually in a very fast growing SUV market. They have the largest market share, and in terms of the overall passenger vehicle share, they are second. The first largest is Maruti, and then comes Mahindra and Mahindra. So this is an example of a company also well diversified across both urban and rural, and not just stuck in one line of business, but able to seize opportunities as and when they arise. Lastly, on Mahindra, so just one thing also which stands out is how innovative it's been. So, for example, in FY24, it received a record of 674 patents, and over the years, it has accumulated around 1185 patents. So clearly, it puts innovation at the forefront. And apart from that, It has partnered with several global firms. So Pininfarina for its design, there are for its EV build up. It's partnering with Volkswagen and British International Investment. You're seeing that they're also the SUVs. Plenty of you would have seen them, sort of quite common now on Indian roads, and they are expected to form 20 to 30% of the overall product portfolio, SUV portfolio by 2030. So, instead of just resting on their laurels and saying that, okay, Mahindra, we are very good, we don't really need to innovate. They've done the exact opposite. They've seen a new opportunity, which is EVs, and they've gone for it, full throttle. And the results are sort of clear for all to see. So that was concluding the first part of the presentation, where we have spoken, about why investing in leaders makes sense, and then seen some practical examples of, how L&T, Mahindra, just to take two names, of how they have, in practice, how do these leaders, maintain their dominance and keep innovating and remain good investments. So I was saying the HDFC BSE India Sector Leaders Index Fund is tracked passively. It's a passive fund, so it's going to be passively tracking the BSE India Sector Leaders Index. And this is a very simple index in its construction. So the parent index, or rather the index from which the stocks or the portfolio is chosen, is the very broad BSE 500 index. It contains large cap, mid cap, and small caps. And then from each sector of the BSE 500, the top three stocks by the market cap are included. That means each sector gets a representation, and within each sector, the leaders, as defined by the largest three companies, are selected in the index. So this process of reviewing the index and choosing which names are in, which names go out, so on and so forth, it happens twice a year, once in June and once in December. So that is how the companies are chosen in the index. And the next step is how they are weighed, the weightage mechanism used. So again, very simple. Like most other indices, they are based on the free float market cap. And just to ensure that, no one company is too big or any company is too small, each company is capped so that the maximum weight it can have is 5% and the minimum weight would be 1%, and these weights are revised once every quarter. So just to summarize, you take one of the broadest indices in India, the BSE 500 index. It has exposure to 21 sectors. From those 21 sectors, you choose the top three stocks by size, and you review this portfolio just twice a year. Usually there are not too many changes, and the fund manager makes adjustments accordingly, depending on how the portfolio evolves. So here are the 21 sectors that we just described. So here it's telling you, what the sectors are and how is this index different from the broad BSE 500 index. So what stands out is that, the financial services index sector has a much lower weight in the sector leaders index compared to the BSE 500. So it has a weight of 13.5% in the sector leaders versus 30.4 for BSE 500. So in that sense, sector leaders is more diversified. It is less concentrated than the BSE 500 index in terms of financials, and that extra weight is distributed more broadly to several other sectors in the index. So you will see, other sectors like telecommunication, construction, diversified, they tend to have higher weights in the sector leaders index compared to, the financial services index. Compared to the BSE 500 index. So overall, the summary is that you have a more balanced sector weightage in the sector leaders index. You have exposure to 21 sectors, and you are underweight financials, but instead overweight telecom, construction, and diversified. So that's the main story from this slide. And just as Ram also highlighted, with India as a country expected to do well over the next 10-20 years as a structural story, having exposure to all these, broad variety of sectors can be very beneficial for investors. Next slide, just in the interest of time, is again just focusing a little bit more on some specifics about the index and why invest now. So one point is that even though the portfolio is comprised exclusively of sector leaders, as the name suggests, these are very high quality companies. But even despite the fact that these companies are high quality, the valuations of the index are still very much in line with the broader market. So it's not like, to get or invest in these high quality companies, you're paying a premium. It's quite the opposite. There's almost no valuation difference between the sector leaders index and the BSE 500 index. So for the sector leaders index, you have to pay right now, the PE was around 24.44. And for the broader market, which is like representing 500, India's 500 largest companies, the PE was extremely similar at just 24.42. So no valuation premium for a portfolio which literally has, is full of leaders. um, Second thing is that this index tends to be more large cap heavy. And the reason for that is that if you go back, it's quite logical, because if you go back to how the index is made, you're choosing the largest three companies by size. So in most cases, in most sectors, the largest three companies happen to be large caps. Of course, there are a few sectors where, they themselves, the sectors themselves are not so big to be included in the large cap universe. In those cases, you have some amount of mid cap and small cap exposure as well. But the point to note is that overwhelmingly this index is a large cap index, and that is also something potentially beneficial in the current market environment. The reason being that large caps in general, they have a much more, the valuations are much more reasonable to compare to the long term average, as opposed to mid and small right now. So again, for someone who's looking and generally has a preference towards a large cap portfolio, who's more comfortable, with the valuations being in line with the long term average, this sector leaders index fund could potentially be suitable for them. And last point, we touched upon this earlier when we said that, you're getting very wide exposure and less concentration than the BSE 500 at the sector level. So this just gives it to you in numbers, that in the sector leaders index, your top three sectors account for 30% of the index, just 30%. But for the wider BSE 500, that number is 46%. So when you go with the sector leaders index, you are getting diversified exposure, less concentrated exposure to the same 21 sectors, and with focused exposure to the leaders of each sector. So last section, before I summarize and then we can go to Q&A, we'll quickly go through, the historical returns of this index. And here we can see that over the long term, the sector leaders index has outperformed the BSE 500 over various long term horizons. So whether it's 3, 5, 15 years, there has been some degree of alpha in the sector leaders strategy compared to the BSE 500. Even if we see it, on an FY basis, so around in 19 financial years for which we have data, in 12 of those, so around 63% of the time, the sector leaders index has done better than the BSE 500. So slight edge in terms of consistency for the sector leaders index. And lastly, again, this is something Ram highlighted upon, during his introduction. We look at the rolling returns analysis as well. Idea is to remove, the any sort of distortions that can occur when you just focus at only, one or two particular points. So here again, this slide is clearly showing you the data in favor of the sector leaders index. So why? First, you can see that on average, the rolling returns for the sector leaders index is higher than the BSE 500. This is true over 1, 3, 5, and 10 years. So, for example, over any 3-year rolling period, its average return was 14.1% CAGR, and the corresponding figure for the BSE 500 was 13.2%. But what's more interesting, is that the volatility of these returns has actually been lower for the sector leaders index than the 500. And this is interesting because if you remember, this is just around a 60-61 stock index, whereas so it tends to be, more, it has fewer names, therefore it could be more volatile. But we are seeing that because the names tend, they are the leaders, they tend to be a little bit, they tend to be higher quality and somewhat more stable at the index level. The volatility of this index of the sector leaders has been lower than the broader BSE 500. So what is the end result? The end result is that on a return risk, on a risk adjusted basis, you're seeing the sector leaders index historically having done better than the BSE 500 through a combination both of higher rolling returns and lower volatility. So with that, this concludes, the sort of content part of the presentation. I'd just like to summarize, that why should an investor consider the HDFC BSE India Sector Leaders Index Fund, and just 4 points, to leave you with. One is that this index is providing you exposure to the leaders across 20 sectors. So we saw at length, what makes leaders special, why investing in them makes sense. So this is a very unique strategy in that it gives you exposure to all major sectors of the Indian economy, but it focuses on the three leaders, the three key companies from each sector. So it's a good blend of getting diversification and focus in a single product. Second, we've spoken at length about how, the leaders, they have moats. Moats are basically, some trade, something special about the company which makes it very difficult for others to compete against it, and that is what lets these companies compound wealth over the long term. So investing in such companies with deep moats makes sense. Third is that, in the current market environment, the portfolio of sector leaders is very much in line valuation wise with the broader BSE 500. So even though you are investing in leaders, there is no valuation premium that you are paying. You are pretty much in line with the broader market for companies with better quality in aggregate. And lastly, we've seen that long term, this strategy has outperformed the BSE 500 both on a rolling return basis and also on a point to point KGA basis. So these are the four main reasons for looking to invest in this particular scheme. The remaining slides I'll just cycle through quickly. This is just talking about, our strength in passives and how we are the largest. We have a history of over 20 years in managing passive funds. We have the largest, or at least we are in the top three in several large categories as well, and we also have an extremely wide product bouquet, so across ETFs and index funds. So there is a wide range of products to satisfy pretty much any investor need through our product suite. Very quickly on the fund facts. So as this is a passive index fund, the fund managers are Nandita and Arun. They are our fund managers for the other index funds as well. And just worth noting that the entry amount to invest is very low at rupees 100. So even if you just want to get started, you can do so. SIPs are all. It's also possible to invest in the NFO through SIPs. And the second important point to note is that there is no exit load. So obviously we want our investors to stay invested for the long term, but if you do need to withdraw, there is no exit load as well. So here standard, the asset allocation table. So bulk, vast majority of the assets will be invested in equities of the BSE Sector Leaders Index. And as with any other equity product, this also, as per the riskometer definition, comes under the very high risk category.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.